Okay, and welcome out to our Market Skyline. Coach T with Coach Noah here. And Noah, back 2 weeks in a row to do the Skyline with me. Matt is traveling. In fact, I was on the phone with him today. He was in between airports and coming back from Hong Kong and the Philippines. And so he'll be back on the podcast next week. And I got a little sappy there. No, I said, Matt, I miss you, bro. Get home. So I can tell you what it is. It is what it is. All right. So the ES contract, let's talk about the S&P 500. We had a dip in February. We've talked about it a lot, then a rally, then volatility and back and forth. Here we are going back above some moving averages, Noah. Read the chart for our audience out there.
Yeah, you bet. We can see where the market came down and really tested that 200 period moving average. And it's now powered up over the very short-term moving averages. I've got an 8-period moving average on there and a 20, and it's traded up above those. And those are set to cross right now. And that's an extra confirmation, just letting us know. We already know that the price is running up. It's testing in the old support resistance zone. So you might see kind of an M for murder here and a possible kiss goodbye, but it's really pressuring that right now. I actually think it might break. It's here against the 50-period moving average, which you can see is that, green line coming down there. And, there's some possible resistance out here. The volume's getting a little quiet as you kind of see it waning a little bit as prices are rising into a bit of a wedge. But again, my seasonal expectation is bullish. And there are certain sectors that I expect to be more bullish this time of year. There's other handful of sectors, particularly tech. It's got a little bit more of a bearish setup to it. But overall, I think the market is showing some bullish life. I don't want to, paint it with my bias too much because we always know it can go either way in this case. And this is in a important price zone. I think that this zone right here is going to be one that if it can power through that, I think that's a strong sign for the bulls. But if we see some selling pressure come in here, it's a zone where we might expect that.
I'm a big believer that every trader needs to have an opinion, even if the opinion is neutral, not enough information, whatever it is, and you work through the process to get there. The chart is the most efficient way to see what the market is doing. And right now it is showing a little bit of strength heading into earnings season. Some interesting news from the last week, Noah, since we had our last podcast. China, President Xi, he's talking about new trade partnerships and the tariff stuff was back and forth. That kind of took a back seat because the Fed had a meeting or a minutes released on Wednesday where they, still lean hawkish at the recent meeting. A lot of the notes that came out, I went through them. And they were going to raise interest rates, so that took another backseat as well because the biggest two stories of the week were the bombs in Syria and earnings season. When you're looking simply at the numbers, corporate earnings is kicking off right now, and that is going to drive prices in the market. And then you had the issue over the weekend, the United States and many other allies were a part of this as well. But a U.S.-led strike in Syria and the questions of conflict and uncertainty and what is this going to mean for the market. We had an entire podcast on war and how war traditionally has been bullish. No, markets don't tend to, overreact to this. They tend to focus on the numbers, right?
Yeah, I mean it's not like it's that uncommon, unfortunately. But yeah, the markets tend to take that in stride. I think it certainly lends itself to the bullishness, and there's certain sectors that benefit, like in this particular case, energy sector, defense sector. And those would certainly have a little bit more bullish bias to it. Mm-hmm. But overall, it doesn't spook the market much.
Yeah. One of the stocks, that was in the news quite a bit this week was also Facebook, as Zuckerberg gave some testimony on Capitol Hill. Will you bring up a chart for Facebook shortly?
Oh, yeah, you bet. It seems to be kind of weighing down some of those fangs, and it's in an interesting kiss goodbye setup I look at here, Tim. You can see where, kind of rallied down on the bad news, and you got a little Zuckerberg and it's big support resistance zone. And I can see it going either way. But I think that this rally might be a little short-lived.
Whenever a stock that has had a very serious sell-off rallies into the old floor, a trader's going to call that a kiss goodbye. And if you're out there listening, you might have also heard that called a kiss of death. They both mean the same thing. Just it depends on how dark you want to be.
Just a little bit more dramatic than the other.
Yeah, right? For sure. But the old support about that 170 zone had failed when that news came out about Cambridge Analytica and all that kind of stuff. Market sells off. Now it's rallied back. Going to be an interesting one as we move into their earnings coming up. The Facebook earnings, usually the tech sectors that second, third week of the earnings season. I think it's coming up in about 9 days, the 25th of April. So going to be an interesting one there. Let's move on to the volatility index. And let's talk just in general about earnings season. As a matter of fact, earnings happen all year long. There are companies that report in February and March, but we call April earnings season. Noah, why is that?
Well, you're getting not only, an earnings season, it's just your ballpark time of year when all the corporations are scheduled to release their reports. They roll them out quarterly, but there's concentrated efforts, during the time of year when we hit that quarterly rollover. So after the quarters end is when you're seeing the companies report, and they do stretch them out over time, but the vast majority of them report in about a 3-week period.
Yeah, because of when they report. So a big portion of the companies are going to report right now. Volatility had been held artificially high, in my opinion, for a bit. As the market was settling down, being in the 20s there, I thought it would fade. Now here, as we're getting into earnings season, even with some of the risk in the news, we're seeing volatility come down. This is a reflection that markets are not that nervous about these earnings coming up. Do you think volatility is underpriced, overpriced? What are you reading here on the VIX?
It's at 16, which is not too high. It's not too low. I think that kind of puts it in a nice place for premium sellers. But the market's not overly scared. I worry more about that when the VIX gets up over 20, 25, 26. But down here at 16, there's some premium. It's not, but the market's not overly, I think, concerned right now.
It tells you a lot about market participants when in the face of airstrikes in Syria and problems and rising interest rates and Facebook, one of the biggest companies in the market, and they've been such a leader in the tech sector driving that bull market, all these issues that could be headline risk. And a new trader might think, well, that's negative, negative, negative. The market's not seeing that risk, and they are bringing option prices lower. Going to be interesting to watch this thing go through April, because if we have a smooth April, and the next few weeks of earnings season, that VIX might be down towards that 10 level at some point here in May. Would not surprise me. You're going to need market pressure for that thing to pop back up again. There's no question. So interesting chart. Let's go on to crude oil here, CL. It's been a big one here. Obviously a breakout, beautiful pivot. Noah, I have to say, it does no good to pat yourself on the back, but it does feel good sometimes. You had a great call on this. Trigger, pivot, beautiful trend. It triggered up, broke above 64. We talked about this one last week. It went up 3.5 points. Nice read on that.
Well, it's one that I look towards every year in the springtime. I look for energy to run in oil specifically from, sometimes early as March, April, clear through even May and June. And so this meets my seasonal expectation. It's poked its head up to a new high, which I think shows that it's got some bullish legs behind it. And of course, that's very common for it to retest. And then I think some of the conflict in Syria does lend itself to rising energy prices. There's some major pipelines in that area. So
crude has ran, and here's, I guess, the opportunity to learn here. With that red candle, I know most traders would be hedging or taking profit here, Noah. Mm-hmm. Explain the last 5 or 6 candles from the pivot, because by the way, if you listen to our podcast every week, you remember this from last week. Noah and I were talking about crude oil, pullback, pivot, green candle, waiting for a trigger. Boom, there we are. Now we got a red candle at the top. Noah, how do you use that information if you're trading?
Well, it looks to me like the market's running in cycles. So you can see the cycles that are running through there. And it came down into what I would consider a support zone or a trend zone. We talked about the, bullish engulf or bullish harami style candle. And that first candle up, you typically get really good momentum early in the run. You'll notice that it's very common to get these big candles early on. And you got a couple of, good candles running through. That's early in the buying pressure. And you got some really nice volume associated with that. And then what happens is as prices rise, the short-term traders are looking to take profits. The demand slows down on the short term because everybody who bought in on these, first 2 candles has made a little bit of money. And when we see those candles slow down, that's my first sign, when we see those shrinking candles. And in the context, this broke out and broke out clear to a new high. So this selling candle right here, if I'm a swing trader, I'm taking the money. But if I'm a position trader, I'm probably just thinking, okay, let it come down, retest, and see if it runs up more. So I'm not going to overthink it if I'm a little bit longer term position trader. If I was able to buy back in here and get a break even point up to my stop loss up to break even, I'd let that retest that support resistance zone, see if it turns into a pullback and runs on to another swing. So it just depends on your time frame, how much emphasis you put on those daily candles. And you see the selling pressure coming long before the red candle comes in. You see the candle shrink. You see this, we'd call this out here kind of a spinning top type candle. And those small candles frequently occur on the tops. You'll see that time and time again. Where after a nice run, small candles, sometimes they're red, sometimes they're green. Those small candles are what we typically look for on short-term swing tops, and you can change your time frame out to weekly charts and have that weekly perspective for a longer term. It all comes back down to your time frame. When are you looking to take the profits?
Sure, because if you traded a stock like an ETF on USO or something directionally as a swing trade, or if you bought a call option, you're going to be treating this candlestick different than if you played a bull call or some kind of advanced multi-leg option spread. So it does depend on strategy, time frame, execution for sure. Love the analysis there. Those little tiny candlesticks, momentum changes, then you learn from it. Swing traders need to be more precise, though day to day, there's more execution demanded by a swing trader. A position trader probably can be a little bit more patient, let that thing seasonally work.
And if you look at that from a short-term channeling perspective, it got right up to the top of the channel where we would expect to take profits. And so, we might see it sell all the way across the channel. It might come all the way back down. So if you're a swing trader, you're definitely looking to lock in a profit because it crossed the entire channel. If you're a position trader, you'd be hoping it didn't come down more than like mid-channel and then took off again.
Beautiful. All right, let's move on to gold and the GC contract. I love looking at futures. I know I say a lot of things over and over again, so I probably, if you listen to me before, I've said this before. Even if you don't trade futures, I like charting the futures when I do market analysis because then they're a 24-hour day product. There's no gapping on the candles. They're a little easier to read. Gold tried to break out, failed. Tested that little candle, came back in the range, but it's still got an ascending pressure to it. Little bit of a triangle there. But generally a consolidation here. When a failed breakout occurs, Noah, what does that do psychologically for you as a trader?
Well, it makes me, one, respect that resistance zone quite a bit. It also, anytime it pokes its head up against resistance and trades up in that resistance zone, it clears out some of the supply. So I can look at it both ways. It tested, it's poked its head up there, but it hasn't made lower lows. So I still think that this is under, that resistance zone is under pressure. And think about it, like it cleared out some of the selling inventory. It cleared out some of the selling inventory. It cleared out some of the selling inventory. It's cleared out some of the selling inventory. So unless new inventory comes in, eventually what happens is the price will overpower that zone. The buyers, with those higher lows stepping up. You could look at this as like a giant macro cup and handle. If you were to change timeframes out to a weekly, it's going to look like a cup and handle pattern. I'm pretty sure I've got a weekly chart here somewhere. Nope, I don't. So let's just drop it out to a weekly, and you'll see that that's got a nice little cup and handle look, and it's even it's even a bigger resistance zone. So there's a lot of resistance out there. If it breaks out, I'm for sure a buyer, but it's a big resistance zone, so you got to bide your time on that.
Yeah, definitely. And obviously we are, long-term bullish on metals when it comes to owning them for a different reason. For hedging traders, you got to be aware of some of these levels. There's no doubt. And these triggers, I'm with you. That does make me respect that 1360 zone. There's another thing about that the fact that it was a tail, not a body close above it. Mm-hmm. I get a lot of questions all the time. Is it a breakout if it just goes there intraday or not? And frankly, that's a gray area question, but it did try to break out. But when it doesn't close up there, just tails up there, that is also a signal, right, Noah?
Yeah, the best description I've ever gotten on this was from Jeff Crystal. He called it whack-a-mole. The fair game where it pops its head up and it gets smacked right back down.
Whack a
So,
gold.
whack-a-gold. Yep. Whack-a-gold.
Oh, I love it. That's funny. That is a Jeff thing to say for sure. A longtime friend of the podcast, mentor to Noah and myself. Jeff Crystal is a mentor over at Legacy Education. And Cam, he's been on a few of our podcasts. We'll have to get him back over here and talk at Forex, asking him about that whack-a-mole strategy. It's going to dollar sign DXY and the dollar index. I don't know why Thinkorswim did this a while back. They used to have dollar futures you could pull up. Now you got to pull up the dollar index, but say la vie.
Well, they changed the futures, and it came down to the fees, the exchange fees, and them having access to the free data. So
yeah, the cost. Money's the word of the day, all right?
always.
Yeah. All right. So compression range down here. Dollar's been weak in the last week or so, 6 or 7 candles. Most of them have been red. It hasn't quite tested that 88 level. And you've got that kind of funky triangle compression pattern happening. Is there anything to see here much besides just?
I've honestly expected a little bit more out of the dollar on reaction to the news on interest rates, but it hasn't really responded much. I think just in context, in the picture of the global landscape on currencies, the dollar is just hovering. I think it's playing wait and see.
Yeah, and I love trading the currency pairs when there is volatility. I do it not quite as much as I use hardly any other product. I use options most, and futures probably second. Then Forex is there when I want it. The euro dollar and the pound dollar, those pairs from that part of the world, I have been bullish on. And with the red candle, I mean, it is showing some strength. If you are interested in cross currency trading, I would definitely recommend, learning from a mentor like Jeff. He does a lot of Forex stuff, and the dollar. I learned a long time ago from Jeff, Noah, that the dollar drives everything, because of its importance to the value of commodities and gold and crude and everything else. When the dollar's moving, it's moving the market. There's no doubt. So it's going to be interesting to watch this range play out. Let's move on to Bitcoin. Last one, not least, but Bitcoin. Ever so slightly, we've had a little bit of a support hold. We talked about that support zone last week, how it was pretty tenuous, pretty weak, not a great signal, but it was there, and it ended up playing itself out. Nice little 2,000-point rally here, good green candles. Yeah. Charts alone, what are you seeing here?
Well, I still think it's got an overall bearish sentiment in spite of the double bottom. It's tested that support zone. We've got a little rally out of it, and you can see, a little pickup in the volume on the futures there. But I think the overall context is still lower lows and lower highs. So I still think that there's some downward pressure on that. If we can see it transition and make some higher lows and higher highs, that would certainly change my opinion of it.
I've got the distinct feeling with cryptocurrency lately, Noah, that I'm just in over my head in terms of understanding how this market works. And I know it really well, frankly. And I know that that's true. I know the cryptos. I know all the different comparisons, how they represent, what they represent, the value. I know more about crypto than most, and yet I still feel like there's a lot going on here I don't follow. One of them is what are the miners making money down here? How does this affect when prices are volatile like this? Does it affect the overall demand for crypto? I got to go back to school, dude. I mean, it is what it is.
Well, I did read an article that said at these prices, turning a profit on mining is harder.
Yeah.
And so, that just take that with a grain of salt. But that was the takeaway, that at these lower prices, the what it takes to go into the mining versus what you can pull out of it profit wise is not as easy. And then I think that the overall, it just reminds me of the tech bubble after it burst. Everybody was into technology in the late 90s, but come 2001, nobody wanted to touch it with a 10-foot pole. And it took us some while to find a bottom and recover. And those same, not all the stocks survived the bubble crash, just like not all the cryptos will survive, of course. But the big players not only survive, they end up thriving. It just takes time after I think people's confidence gets shattered after big cut in price coming down 50% from those highs, if not more. I think that makes people hesitant to jump back in, even though that's probably your better opportunity.
Well, and like we talked about, I think big money is much more likely to start dedicating resources and funds. So those like institutions that have 2 or 300 million as part of their spec in their overall $10 billion portfolio, whatever it might be, maybe a Wall Street firm, they might be more likely to go after Bitcoin now that it's becoming more established and not quite the bubble we were in, the hysteria we were last fall, which is why I like seeing these support zones hold. But I'm expecting more volatility. There's no question about it. And it still is in a lower low, lower high pattern. And you can chart anything, guys. It does take a lot of the emotion out of it by just simply looking at the chart. And the last thing I want to look at here, Noah, real quick peek, is just the earnings heat map. And there's a lot of heat maps. Heat maps are so great. I love using them. And this is a heat map on FinViz. And I use FinViz. I've used it for a decade. I use FinViz quite often, Noah.
I do. I have other scanners that I like to use that don't have the pop-up ads, so I use those. But you can't, it's a nice free product that has some nice features and scans and
Sure.
Bang for the buck. Yeah, I use FinViz.
Now, what we've done here, the typical heat map is going to measure the performance of stocks in a specific area like the S&P or, the world or an ETF or whatever it is. What we've done here is we've had it load to show the earnings dates for the companies. Anything in pink is within 30 days of having its earnings come up. Anything with blue has already had the earnings. So watching a heat map like this throughout earnings season, if you're out there, it will give you a good idea on how many companies have reported. And here's a reminder for my beginners and my veterans, you have to know your earnings dates. I was talking to a trader who has 2 or 3 years experience, Noah, and I asked him, well, what are you trading? He said, Netflix. And I said, well, they got earnings tonight, and just a reminder, right? And he was not aware of that. He forgot.
Well, yeah, I've done it myself. And that's, I think, when you learn to respect earnings dates. And so
For sure.
For sure. You don't have to do that many times to remember to double check those earnings dates.
Yeah, and it can feel like a crapshoot on earnings. So you have to make sure you go in and plan that and understand it and do some of your research. Guys, that has been our Market Skyline. We'll be right back after these words.